to Wealth weekly Sunday market update. I'm Gordon Scott. I'm going to be talking about U.S. equity markets. I'm going to tell you a little bit about what's driving them right now, and then give you some ideas about what might make for good trades in the upcoming week. So let's start with the main driver that has been really moving prices around for the last, since the beginning of the year, really. And that is the inflation data and the whole story and narrative behind customers' expectations, or customers, investors' um, expectations for inflation. And that's been significant because if you have to pay more for what you're going to uh, live on or spend and buy in the future, then your retirement savings or savings of any kind are going to be worth less, and you're going to need to invest more in order to make up for it, right? That's why people are really paying close attention to this, is they want to know where to put their money, where to shift their money. Now, if somebody comes along and says, hey, this piece of information tells us that inflation is not as bad as we thought, or inflation's worse than we thought, right? You can hear a news headline, but what you really care about is, what is the market doing? What are people, investors, and traders, what are they doing? So this week, we had a piece of information that said one thing, but prices did another thing. Let me show you what I mean. So, if you check out, I mean, you probably heard the information, right? But if you look over the last week, we saw data on the core, or the CPI numbers and the core CPI. And let me see if I can share my screen and you can, there we go. It's going to be this one. Hopefully you're looking at my page of Forex Factory right now. And here, May 15th, last Wednesday, you see the inflation, the latest inflation numbers. The core CPI came in just as expected. It was forecast to be 0.3, came in at 0.3. Core retail sales, forecast 0.2, came in 0.2. CPI year over year, forecast at 3.4, came in at 3.4. Now, keep in mind, 2% or less is what the Fed kind of wants to have or has said they want to have. And it's also what consumers got used to pre-pandemic. Okay. All that being said, 3.4 is really not that bad, but 3.4 is higher than people want, than investors want. Investors want to see this thing down at 2% if they could. But the one number that was different from forecast is the CPI month over month. That number came in at 0.3, a little bit lower than expected. Should be good news, right? In fact, people began making headlines and noise along the lines of, wow, hey, maybe the Fed will cut rates in September. Okay. And then markets started to sort of lift as a result of that. Here is what happened right after the inflation numbers. And then here's what happened Thursday and Friday. Prices sort of held. Okay, now you might think that means that people are fine. They're like, okay, maybe inflation is over. That's good. Let's jump in, right? But look what happened on Friday. Here I'm going to show you a chart of Freeport McMoran. This is a mining company. They have big mines in Australia, so they're connected not only with gold and silver, but with copper mines. More probably more with copper than the other, but they're a large mining company. And pay close attention to this price action. On Tuesday, Tuesday, this thing broke new highs, new 52-week highs, and well, yeah, it's on quite the tear. Well, that's going to be coincident with gold and uh, you know basic materials, right? So it goes running up. Why is that? Well, because the CPI came out on Wednesday, but on Tuesday the producers price index data came out, and it was similar. It was slightly better than expected. Um, and this might have had, you know, because basically producers were saying, yeah, we're going to be okay. We're going to be willing to buy stuff. And if they're buying stuff, they're buying basic materials to make stuff, and therefore the basic materials company getting treated bullishly. But look on the day that the inflation numbers came out. FCX uh, started high, but came all the way down. This is a bullish engulfing candle at one point in the middle of the day. See how that red line is like it wiped out all of the optimism the day before. The CPI numbers, which said, hey, inflation's not going to be that bad, that made markets think, oh, well, if inflation's not going to be that bad, we really don't need to hedge with gold and basic materials and stuff. So, you know, why run FCX up? That's how the narrative should have coincided, but it didn't. Instead, buyers came flooding in and ran the price back up to a new high on the CPI day. And then the next day, another bearish engulfing candle. Should have been a bearish signal, right? I got these two little oscillators down here, both showing bearish divergences, saying, hey, this thing's oversold. This is, look for a top. And then Friday, this was the top stock in my list of, um, you know, 30 stocks, which are kind of, heavily influencing the market. Top stock of the day. The second top stock of the day, Newmont Mining, one of the largest, if not largest, gold miners. I think actually now it's Barrick is the largest, but Newmont's up there. Also, brand new high. GLD ETF, also brand new high. So all these are related to the fact that the price of gold is going up. But why is the price of gold going up? Because inflation. In other words, the market doesn't believe it. The market thinks, oh, no, inflation is here to stay. Well, we got the data that said, it's not so bad, and maybe it's going to creep down a little. Nope. No, says the market. It's going to keep going up. So we have to invest in stocks. We have to invest in gold. And it's not in my list there, but yeah, here's Bitcoin. Now, Bitcoin's not making a new high, but see, in just the past few days, up it goes as well. Now, Bitcoin is not strictly the same inflation hedge that gold is. Obvious from the chart, right? But it is making a bullish move ever since there in May. So I take that for what you will. I don't know if Bitcoin can enter into this, but I see a huge kind of flag pattern type thing here. See this big movement up, slightly declining sideways channel down. My guess is we're headed for that. But if we break that number on Bitcoin, if you're a Bitcoin trader or a cryptocurrency trader, if we break that number, 68,000, real good chance we head to 73 and continue to break out to a brand new high, maybe even to 75. So, hey, if you're still holding on to your Bitcoin, good news for you. But generally speaking, what are we in for? we're in for more bullish times. Here's a fun chart that that I should show you through this, and that is that red line represents the VIX upside down. It's actually an ETF called SVIX, which is, an inverted VIX. What's the VIX? It's the volatility index. Option buyers and sellers, mainly professional option sellers. It's an index based on their expectations. If SVIX is going lower, their expectations are bearish. If SVIX is going higher, their expectations are bullish. And so what you do is you compare SVIX with SPY. If I go back to, let's see, right here. I want to put a place where the lines are together, and right before the end of the year, you can see that that can be used as a reference point. And from that point, SPY is going up, and SVIX is not at first, but now is. So when you see these things expanding, that's not bullish. But when you see them contracting, that is bullish, right? Notice what happened here. I saw this and I was really surprised. I was a little dismayed because I was planning on things going down for a while longer, but that's okay. I can adjust. I'm a trader. I switch fast, right? See this line right here? On this day, well, it's this one right here, May 9th. See how SVIX was making a new high, and yet the S&P 500 had not yet done so, right? This was a clue to me. Hey, we're not only going to go up and make this same high, we're going to exceed it. Now, I didn't know it was going to work out exactly like, the way it did. I just saw from this angle, that's a bullish signal, right? And if you look at this from that point of view, look at what SVIX is doing. It is charging higher. See, this is the high and then even continuing, and we haven't done that yet. So we're still seeing from the options market more and more bullish behavior. If option sellers are saying, well, we don't feel the need to hedge, we don't feel the need to buy a bunch of more put options because our customers aren't buying put options, then we're going to keep our prices slightly lower. Put options are the kind of thing that really drive the volatility index. The more put options people buy, the higher option prices go. If, in fact, option prices are going lower, then SVIX drives up. And if they're going lower, it's because customers don't think they need the stock insurance, the insurance that the stock price is going to drop, right? So that's what we're seeing, is these bullish indications, and indications driven by the fact that investors think inflation is here to stay, at least at the level that it's at now. And so what to do about it? Well, I said I was going to give you a few ideas. Of course, FCX and the whole gold area might be good trades. Let me give you just a couple of more ideas here. Bring this over. FCX we talked about, but also Citibank and JP Morgan might make for good trades in the upcoming week. AMD and Amgen. Why all these? Well, healthcare, that's a whole other story. And AMD, that's a weird story all by itself. But Citibank and JP Morgan, or Citigroup and JP Morgan, these are companies that are going to benefit from having interest rates hang around a little bit higher for a little bit longer. And this idea is that you could buy them, like in the case of Citibank, put your stop loss about 1.8%, JP Morgan about 2.2%. So, on average, 2% stop loss. That's kind of a tight stop loss, right? Citibank, you could expect to take profit 3% or more. JP Morgan, risk one to make one, 2% both directions. Those are some interesting trade ideas. These trade ideas come from this software, Edge Finder. I'm not running a commercial about it. I just use this tool religiously nowadays because it works good. Here's my test account. It's live money. It's not it's not a paper trading account. And here's what it's done with Edge Finder signals over the past 6 months, starting at 25,000, dipping down to 24,600, up to 32,865. That's a 30% increase in 6 months. So that's my rationale for why I use that tool. All right, so generally speaking, I think we're looking for continued bullishness that also fits the seasonality of election year dynamics. We usually see a rise all the way into October, not straight up, but just general lift. And for the presidential election cycles in the U.S. And so I think we're looking at bullish moves to be predominant for the next week in the U.S. Stock markets, and with the idea that U.S. markets should continue to dominate. Why? Because inflation expectations. Here, this chart, well, let's just actually use the dollar here. So the euro USD, right? Euro kind of went up with U.S. the inflation news, right? It went up on Wednesday, just same as or similar to the U.S. stock market. That's an interesting thing, isn't it? Because if we're seeing inflation, then why shouldn't that mean the U.S. dollar is strong? No, it's the other way around. It's if you get inflation, that's weakening the currency, and that's why we're seeing that. So if inflation is going to hang around, then euro trades are probably going to be strong and be a little persistently bullish for the next few months. As long as investors are worried about U.S. inflation, you're going to see the euro continue to do well. That's actually kind of an interesting statement. If I look at this, right? I say, okay, this is if this is the current channel we're in, sort of intermediate. Well, actually, let me do it this way. I want these things to be parallel. When you're going bullish, you want to set the bottom, and then you want the top to be parallel to that. Oh, I didn't quite get that line. There we go. Let's do that. Now let's clone that. There we go. Now let's see, where does that fit? See, that I'm having trouble making that fit. But however I draw it, see, I'm having trouble because these lines don't perfectly match up with the top. But however I make it fit, have you noticed that the euro broke that channel and is kind of holding that break? That's the important observation here. And I think that's a big deal, because if in fact this has been the predominant trend and we just broke that, this sort of paves the way for us to for the euro to hit its former high and then head for that one. So general upward trend through these things to, probably hit some resistance right there at that mark at 1.1, just under 1.1, and then make it through to 1.113.4, call it. So I mean, there's some really good bullishness. We're looking there. We're looking about 200-300 pips of move. So that could be good. That could be a good area to trade in. And you would think that if in fact we're going to see breakouts with companies like Newmont Mining and Freeport, then you would also expect to see the Australian dollar do well. And sure enough, this is breaking intermediate highs. Just sort of blue sky territory to go up and get that new high at 68.5. Uh, that's I don't know I don't know if I want to say that's inevitable, but it's a reasonable bias to have to continue to see that be bullish. So dollar weakness and currencies against the dollar. See, the Canadian though, yeah, made this new high, still a heavy downtrend. So Australian, yes, Euro, yes, Canadian, and then we've got um, oh sorry, USD JPY. You want to check out the yen. If in fact we're going to see dollar weakness across the board because of inflation expectations, then shouldn't we see the dollar weaken against the yen? Well, yeah, apparently that's getting ready to happen. Look at this huge size of candles compared to the past, right? So right in here, not Wednesday, although there it was Wednesday, right? Inflation numbers, and yet dollar dropped like a stone. You know, just just all of this to me says top, right? So I think real good chance that you could see the U.S. dollar decline against the yen, and that's interesting. That's an interesting dynamic because this usually tracks along with the U.S. markets, and if the U.S. markets are going strong, why wouldn't the U.S. yen continue to do so? Well, okay, probably because people are done with the carry trade. They buy U.S. dollars with yen to collect the interest rate difference. And I think that what we just saw is that a lot of money is saying, nah, it's not going to get any better than this. Let's pull out. Whoops. Um, there. Notice the difference in the Australian dollar versus Japanese yen compared to the US dollar versus Japanese yen. Yeah, a lot more fluctuation here too, but this is up there hitting new highs. And this tends to track even more closely with US equity markets. And so, to me, what I'm seeing is confirmation. You got the Aussie dollar going up, hitting new highs. We'll see the US equity markets hitting new highs, all as a result of US dollar weakness. And that's it for this week. Hopefully that was useful to you. Any, I'm just going to look here, make sure I didn't leave any questions unanswered. If I can get back to there we go. All right. Until next time, everyone, take